Welcome, everybody. This is the Trader Circle, September 2025. For those who are new here, my name is Advent or Desi, depending on where you're coming from. If you are new to this specific session or what is it, class, I guess we can say, pretty much all we do today is this is just like a group coaching session where we all come together and you can pretty much ask me whatever you want. So, any struggles that you're having, anything that you want to learn that you're not familiar with or that you're not fully getting, pretty much whatever you want. We can go over charts, anything goes. And with that being said, whenever you guys want to come on, you can ask your questions in the chat. You can ask your questions, come on, voice, whatever you guys want, and we'll go over it. Let me bring up my questionnaire as well.
I have a question.
Go for it.
My question is, how do you determine if a play is a good swing or day trade? Like when you're looking at the chart, um, how do you determine, like, when you're looking at SPY, for instance, like, how do you know, like, okay, this is a good setup for a swing trade? Um,
Uh, there,
yeah.
there could be many different things to add in there. Like, for example, let's say we're looking at the weekly time frame and we may be looking to swing it to the upside. I myself wouldn't swing SPY itself. I'll probably maybe look at like Apple or something like that. But let's just say for the sake of the conversation, we're just going to be looking at SPY right now. So if I were to look at this to take some swings to the upside, what we'd have, what do we have going for SPY, right? If we do top-down analysis to see the overall trend, we can see the yearly's pretty much bullish, right? We have a two up there. Then we can go on the quarterly, same thing, a two up. Monthly, same thing. Weekly, pretty much same thing. Daily just has a failed two up. So overall, everything is pointing for SPY to continue higher, right? So this will be a trade that we will be taking in continuation with the trend. So that'll give us additional confluence with SPY wanting to continue going up. So that can be one thing that can be a potential like good trade, right? Or at least maybe a higher probability one. Now, let's say for the sake of the conversation, let's go back to United Health. So coming back to United Health, the reason why I took this swing trade is because we had 2 weeks prior to this hammer, we had big bullish momentum because Warren, I think Warren Buffett bought United Health, if I recall correctly. And then from there, we had like another week that did trigger up, but didn't really do much. The week after that, it came back down, dipped into this fair value gap, which isn't really my go-to for confluence. To me, it's just like a sprinkle on top. But the biggest thing to me was this hammer that printed on the weekly time frame. And as we know, for strat users, we want to really be looking at or looking for actionable signals, which will be hammers, reverse hammers, things like that. I don't have my broader information drawn here. And I think even on Thinkorswim, when I have them, it doesn't have, I didn't get anything that was bouncing off of that level. But just the hammer in and of itself with that big, strong news alongside it dipping into that fair value gap and getting some of that liquidity, to me, everything pointed to the stock continuing to go to the upside, which the following week we did get that reversal. So this was a two down, two up bullish reversal off the weekly time frame. I have about 45 days on these contracts. So last week, we were blessed again with really nice news that pretty much propelled us to the upside. Does that make sense on what would make like a good setup or something that, or why we would want to look for it?
So basically, we are looking for, um, so we start off with like the 12 months and then we work our way down to see if it's a bullish trend. And then from there, so are you when you're taking the trade, are you taking the trade on the daily, the or on the like the weekly?
So on this, in this example, it'll be on the weekly.
Okay.
You don't need to look at the higher time frame like the 12-month and quarterly and stuff like that. It just, I'll still look at it just to see
Uh-huh.
what's going on, but that might not even be relevant to the setup, right? For example, let's just say, let's go back to SPY. While I myself would not take the us trade to the downside, let's say for example, if there's broadening formation here, as we know with broadening formations, we're looking for actionable signals off of them, right? If I were to take this short setup off of this imaginary broadening formation reversal, which we have an actionable signal, this reverse hammer, if I were to take that to the downside, I'm going against time continuity, right? So while it's still a valid setup for a strat trade, I personally would not take it because I generally prefer the weekly to be in my direction if I'm going to take this like on a daily, going against all the higher time frames. Now, if we have like mixed time frame continuity, like let's say the month could be red, yearly could be green, or something along those lines, where it's not fully in one direction, sure, I'll take it off the daily, even if the weekly is not in my favor. But again, it really depends on what you may be looking for. For example, another example for you. This will be a bad example. Looking at Tesla, two really strong days. Weekly is freaking super bullish. I would not be looking to short this off the 4 hour. Let's say somebody wants to get in early for a swing trade. Nothing about this chart is telling me to go short at all, especially if you don't have like a, let's say, even a broadening formation reversal. And even if I did, I wouldn't even short it because we have this huge, strong 4 hour candle here. So there's more than likely going to be some buyers hanging around in this area that are probably just going to buy it up. And it's going to be a losing trade on the short side. Did that make sense?
Yes, but what did you mean about fair value gap? What is that?
Uh, so fair value gap is simply just the gap in between. So it's a set of three candles, and it's the gap in between those, the first and the third candle. I don't study ICT. I kind of just get the overall concept of it, at least the way I understand it. So let's say I wouldn't, if I were you, I wouldn't bother learning it for now. I just kind of just mentioned that for people who do know what that is.
Oh, okay.
So let's say this red candle and these two green candles. We're using these three candles here. The point in between this top wick and this bottom wick will be the fair value gap, like this. Now, if price comes back down and dips into this fair value gap, right? We have a lot of buyers probably still hanging out in this area. The higher the time frame, the stronger it's going to be. If it's like a 1 minute, it might not be that strong. So the concept, at least as I understand it, is that price was so strong that the next candle didn't even come that far down from the previous one, right? Meaning it's just a lot of strong momentum in that direction. So in this case, we left a bullish fair value gap. So from my understanding, in this area here, whoever got left behind is probably going to try to get in around this area. So if price reverses, it might dip into here and then just keep on going back up. Let's look back at the United Health example. We have this hammer candle. So we went two up, failed, failed two up to close red. This candle dipped a little bit into the fair value gap, didn't even continue heading lower, just got bought up immediately as soon as it got in there. So whatever buyers were left behind, they got picked up and then they kept on buying it up. But again, I wouldn't worry too much about fair value gaps for you for now until you get the foundation right, and then you can dive into the ICT stuff and things like that.
Okay, thank you.
Of course, if you look in the ICT section, I think there's some. I think there might be some videos there in the futures chat that some people posted about like fair value gaps and stuff like that in 100K's group anyway. But yeah, I don't really teach ICT, so I'm the wrong person to ask about this. But overall, does that make sense? Like why, like what would make us take a specific trade or a swing trade rather?
Yes, it makes more sense now.
Cool. And it's pretty much don't overcomplicate it, right? The same setups that I will take on a weekly time frame, I will take if I'm day trading. It's all the same thing, just a higher time frame or a lower time frame. So
Okay.
if you take let's say a TTO on the 5 minute, if it sets up on the daily, going to be the same thing, just on a higher time frame. So you might actually swing trade the daily one as opposed to day trading it like you would the 5 or 10 minute or whatever it may be. Cool. Uh, Britt, let's see. You want me to go over how to set up a chart, how to analyze and mark levels, identifying previous week high, low, etc. Pretty straightforward. So usually when I'm day trading, I have these four charts up. So I'll have the 5 minute, 15 minute, 30 minute, and the 1 hour. I'm just going to use YM as an example. So usually what I'll do first, we're on the 4 hour time frame right now. If you use TradingView to make your life a lot easier, let's say if you double click on the line and you write, I don't know, previous week low, whatever it may be, you can go to your templates and you can save it so it can make that horizontal line and it'll keep that for you. So once I draw my line here, I just go to my templates and I could just quickly mark off that that's a 4 hour level. So that 4 hour level is done. If I go to the daily, looks like the daily, well, this daily's open right now. The previous daily low and this 4 hour level will be the same thing. So previous day low. I actually have to add previous day high. Then, previous day high. Again, pretty straightforward. Weekly, previous week low. And then right at the top of that wick, previous week high. So now when I go back over here, I have these levels marked out, so I don't even need to be on those time frames. So I already know that when the market opens tomorrow, if we're under this level, the daily is going to be bearish and the 4 hour is going to be bearish. If price breaks above this level, the 4 hour is going to be bearish and the daily is going to be bearish if it breaks above this wick or this area up here where I have a PDH. So it helps condense your chart so you don't need to have 6,000 different charts up. At least to me, it makes it easier this way, kind of keep it organized. But this is essentially how I keep it. When I'm day trading, I will take into consideration what the time frames are doing in the sense of, let's say, let's see if we have a good example here. Let's go to SPY actually for Friday. Let's go on the 4 hour, or not Friday, Thursday. So this is the 4 hour level to the upside. And then this candle here. So these two candles are one daily candle. So this is previous day high. For some of my setups, I want to be in the current trend of the day, right? Let's go to the 5 minute. And then this was Thursday. So so we have a gap up, right? So the 4 hour is already triggered bullish. Daily is already triggered bullish, pretty much the first 5 minute candle. So let's say if I'm looking to take a bullish TTO setup, What I want to see is the 4 hour, the daily, and the 1 hour in my favor, which I have here, right? 4 hour, clearly bullish because we broke above the last 4 hour candle. Same thing with the daily. We broke that high. All I'm looking for now is a pullback opposite the direction of the trend. And then I'm going to take the first bullish reversal back into the bullish trend. So we have a bullish TTO right here. Not one that I would personally take, but TTO nonetheless. We have another one over here. And then we have a weird looking one here that I wouldn't have taken. So pretty straightforward. We
What's
get
the reason as to why you wouldn't take it?
it's not really clean, like right. So over here we have this push up. Then it didn't really do a pullback. It just double inside bar and then broke that high, and then it kind of came out. We can see right here on the left leg or the left side of the triangle per se, right? Really strong candle. Whereas the one over here, we're gradually slowing down, and then we're coming back down. Then we'll reverse to the upside. While the left side of this one is just straight up. We're not really getting that slowdown of movement, if that makes sense.
So if we see a big, if we're seeing a big candle like that or a long candle like that, then we shouldn't, not necessarily shouldn't, but it's not something that we should consider getting into the trade if it's a TTO setup.
You definitely can. I just don't. I'm just very particular of the ones that I take, which makes
Okay.
a lot of trades because I'm very particular how I want them to look as well. But they're still valid, right? You can still
Okay.
take this. So you're still taking the 5 minute time frame back into bullish continuity because everything is still bullish, right? So I just prefer the way that this one looks. So in this example, we get the two down or failed two down, two up hammer right over here. And we're getting in on this candle. We're getting in on this bullish candle to the upside right there, targeting this high and seeing how further price can take us. That makes sense, Britt? Kind of like marking things out and analyzing the chart. So with TTOs, what I like to do is the first target to me is always going to be when the TTO completes, right? So once that breaks, I'm going to take, let's say I have 3 contracts. I'm probably going to take one off. And then I'll maybe look to the left, see if there's like any other targets that I may have here. Maybe it could be like a previous week high, previous day high, whatever it may be. Maybe a broader information that we can be targeting. But for my runners, what I'll be doing is I'll be trailing every closed candle until price reverses on me on either that time frame or one time frame above. So let's say I could take some profit here once the TTO completes and breaks that high and makes a new high of day. And then I can just trail my stop loss until price reverses on me, which would have happened up here on this two up, two down bearish reversal. So my runners would have left with about 77 cents. Nothing too crazy. It's okay. I wouldn't have really cared too much about this, but as an example of what I would do if I'm taking a TTO. For the TTO, you always want to take some profit when it completes that high and it continues heading higher. And then, of course, whatever your other targets may be, and use that. One thing to note, I don't take a TTO if the risk reward to the TTO completing is not even 1-to-1. So this example here, the risk reward is not even 1-to-1, it's 0.69. I usually have my stop loss for a TTO under that pullback, which would have been here. Now, yes, if you want to be a little more conservative, you can just maybe use 50% of, in this example, that hammer, right? So now your risk reward would be a little better. It's above 1. Again, I don't care for it because I usually have my stop loss under the pullback over here to give it some room. Cool. Uh, let's see. Q, you mentioned depending on the market, there's days where SPX normally picks a direction around 10 to 11 a.m. 70% of the time you're onto it. There are days that it doesn't move until 1 p.m. How can I get better with my timing? Well, it depends. Like, we don't really know when the market's going to do whatever it's going to do, right? We're just going to take our setup as it's presented to us. For example, if I take this two down, two up, right? Sometimes the candle that gets you in, it just goes straight and completes in one shot. In this example, it didn't really do much for about 15 minutes, and then the candle came out of nowhere and just skyrocketed to the upside. We don't really know what the market's going to do. Our only real job is just to get in when the setup tells us to get in, right? So let's go on the 1 hour actually. Let's say tomorrow you're looking at SPY or looking at SPX on the 1 hour or whatever time frame you use. If you take this break to the downside, it can do one of three things. It's either going to rocket down to your target, wherever that may be, maybe this previous candle low. It's going to trigger you in, and then come back up and do nothing. Or it can just stay inside bar all for like 3 hours and then nothing's going to happen, right? We don't really do anything when it's just inside bar. So, in the sense of you getting better timing, I don't really have an answer for that because the market, again, is just going to do what it's going to do. I just see it as our only job is just to get in when we say we should be getting in or the setup says we should be getting in. After that, it's really up to the market and what it wants to do. Of course. Like even Tesla, right? Shout out Tesla. Got me annoyed this week because I missed that gigantic move on Thursday. But for example, Tesla, right? I traded Tesla enough to already know 2 days out of the week, it's gonna move like regularly. One day, sometimes two, it's gonna do pretty much nothing. And at least once a week, every single week, once a week, Tesla goes absolutely crazy in one direction. What day that is that gonna be? I have no idea. All I do is just show up when I'm gonna be trading, and hopefully the day that I get in is the day that it goes crazy. Fortunately, I definitely did not catch that move on Thursday. And then Friday, I was looking at something else, so I didn't catch Tesla. But whoever did, shout out to you guys, because that thing is freaking straight rocket. But yeah, just get in when you're supposed to. Keep it simple. No need to overcomplicate it. Do you find yourself like chasing trades ever? Like, let's say if your setup is not even there and you get in preemptively. Kim, I'll answer your question next. Uh, So usually for me, Kim, if I'm going to be trading, 95% of my analysis is based off technicals and like, the strat and stuff like that. Sometimes I'll add fundamental news to it, but it's very rare. Usually for my long-term investments, I will use a lot more fundamentals, and then I just use technicals to get like a starter position or potentially get a better entry than what I'm looking at right now. But usually for trading, it's like 95% for me, it's just technicals. I don't focus too much on fundamental unless it's like long-term investments and things like that. Cool. Nice, Q. So Sam, uh, do you do you trade the strat or do you trade something else? Also, Brittany, you said you had questions on supply and demand and picking the right contracts. Moving averages, not the strat. Gotcha. Do you usually like what time frames do you usually trade on? 15? You can spot the Forex traders when they use M in front of the time frames. All right, let's see. There's a weird gap. All right, so let's just say for the sake of the conversation, August 15. All right. What time at August 15? Like, was it during Asia, London, New York session? What exactly?
Can you hear me? Might be easy if I walk it out.
Yeah, I can hear you.
So yeah, I trade the Asian session. If you see that downswing that began,
Look a little bit.
just yeah, this one, I pretty much got in right at the beginning of that, but then yeah, I lost my balls and got out really quickly into it, like half an hour into it,
Hmm.
when I could have stayed in and yeah, just rode that swing all the way down.
Like right
So
over
my
here.
hardest part is just figuring out where the heck to exit a trade or when to hold a trade, I guess.
Gotcha. Um, if you're just using moving averages, I'm not 100% sure where you can potentially exit. Because when I used to use moving averages, my first mentor was like, I used to trade options a lot and like regular stock and penny stocks. Usually for options, we would like go for third, like 30% was like amazing. So I would just be aiming for 30% at the time when I would use moving averages. But let's say looking at this strat wise, you got in where I have like this three candle labeled
No, no, even earlier. So probably like see that hammer,
right
um,
over here.
yeah, that one. Probably around there is where I got in.
So let's just say you got in somewhere over here for the sake of the conversation. And you got out when like on this big three candle here, on this two down, if you remember.
Probably three candles after is where I got out.
Oh, so let's say somewhere like around here, something like that.
Yeah.
So different things that you can do. In this case, if which with what I'm about to tell you, you probably would have gotten out in a similar area. So with the strat, we keep things simple for the most part. We just look to the left for targets, right? So in this case, let's assume you got in once the low broke this hammer. We would look to the left and just look at previous candle lows for targets. So there would be a target there. Whoops, let me mark this out or label this anyway. So we would have one there, here, so on and so forth until you pretty much run out of positions. So what I like to do is, in this case, let's say, I don't know, you have what, like 0.15 lots, and you take five off here, and then you take five more off here, and then you had five left, or 0.05 left on your position. What I would usually do is I'll trail each closed candle until price reverses against me. So in this case, after it hit the second target and this candle closed, my stop loss would have been right above this candle because generally price should continue going in a direction. If it pulls back in this case, looks like it did. I went two down, then it went two up, and then it went three down, and then continued a little more as the trend continued. What one of my students does, she has a lot more patience than I do. She goes on a higher time frame from when she got in. So in this case, she would probably went on either the 30-minute or the 1 hour and trailed that for her stop loss. So let's go back to the 15th real quick. So in this case, we got in on the 15-minute, as we saw earlier. And then she would have just stayed in for her runner position until price reversed on her on the time frame above when she got in. So if we're looking on the 30-minute, price basically didn't reverse to back to the upside until all the way down here, until this.
Damn, okay. All right. Yeah, that's good. That's
So
something I should look into, yeah.
yeah, it definitely helps to stay in trades a little longer. Usually for me, I only really trade for 2 hours out of the day, like 2.5 hours. She'll usually do like 3, 4 hours sometimes, unless she makes her money in the first hour. Um, but she uses the 30-minute or 1 hour. Usually I'm like on the 15-minute maximum because I don't like staying more than I need to on the charts. So if I make my money quick, I'm getting off them as soon as I can. I'd rather not like babysit the trades that long. But yeah, you can definitely look into that. Just use previous candle lows, or if you're going long to the upside, previous candle highs as your targets. So in this case, let's just do the reverse. Let's get rid of these lines real quick. Let's say you take this two down, two up reversal. As soon as this candle breaks this wick, we pretty much get in immediately. So in like using futures or Forex, we would just use like a buy stop or sell stop order right above the trigger price to just pretty much automate the trade for us to get in automatically. So if we got in here, again, previous candle highs, I would probably skip this candle here because it's very close to this target. So I'll probably maybe use this body as my second target and then the high of this wick and so on and so forth. So in this case, I probably would have been stopped out pretty early unless I went to the 1 hour. So getting on the 30-minute, first target's hit right over here on this candle. Price continues higher. Looks like it pulls back a little bit. If you were trailing your position like I would have been stopped out on this reversal right here. But then price got bought up. This looks to be news, so I wouldn't really count this. Looks like it spiked up and then came back down before it did this stuff and then came back up. But again, pretty straightforward, using previous candle highs, previous candle lows, and then you could just trail your position for your runner to see how much more juice you can squeeze out the move.
So I have a question. So are we only doing that? Because I thought that we were not supposed to, like if we entered the trade on the 4 hour,
Mhm.
I thought that we were like if we go down to like the hour or the 30-minute, we're not supposed to um like because we entered on the 4 hour, if we go down on the time frame, we're not supposed to like exit or sell on the 30-minute or the hour. I don't know if I'm making sense.
You definitely are. This is not that. This is something completely different.
Okay, so I'm mixing it up.
Yeah, yeah. We're not getting in the 4 hour anywhere here. We're just getting in on the lower time frames. If it's the 4 hour, I do it a little differently where, let's say for the sake of the conversation, uh, let's use this reverse hammer and that two down. So let's say if my max target is down here, I have one target at this wick, that wick, and then the one there. Realistically, I'm not going to have the mental capacity to wait for a 4 hour candle to close if I already hit all my targets, as pretty much that first candle did. Sure, I can just like set an alert every 3, 4 hours and see what happens. Again, it depends on you. I just rather be done with the day and go about my business. But in this case, let's say it hits target two, right? And it hasn't hit target three yet down here. My stop loss, so let's go back to the beginning actually. So if I get in, my stop loss is here. Once target one is hit, I'll move my stop loss to break even or slightly above so I can leave with something, right? Now, if it hits target two, I'm going to take some of my position off and I'm going to move my stop loss to target one. So if price comes back and it hits the target one area, I'm out of the trade. So in the higher time frames, I'll usually trail the position like that based on the targets as it continues hitting them. I'm not really going to trail the entire candle because again, I just don't have the patience to wait that long and I'm going to be gone way before that candle closes. Now, if you're swing trading, yeah, that's easy, right? If I'm swing trading the daily time frame, I'm just going to wait until daily closes. And then if if it hasn't hit any of my previous targets, I'm pretty much in there until the next day and so on and so forth until price reverses against me or I'm happy with whatever profit I hit. Does that make sense? Questions on
So you
that?
do this on the 4 hours. So if it's like the smaller time frames, then okay, yeah, I understand.
Cool. That'll be something you got to practice this week.
Yeah, I will.
Cool. Let's see. Yeah, Sam, definitely let me know how it works out for you. I'm not sure if you have me on Discord or not. If you do know me from Discord, I think I saw that. I think that you got the link from YouTube. Um, you're welcome to send me a message. Let me know how it's working out for you. Britt, what are the different time frames for different sessions? Uh, do you mean what are the times for the different sessions or what are the time frames? Because the time frames for different sessions isn't really a thing. I'm assuming you're asking like what are the gotcha. So for let's bring extended hours. So for Asia, right, that's starts at 8 a.m. Some people consider not 8 a.m., 8 p.m. Eastern time. Some people consider 6 p.m., but from what I've seen, it's 8 p.m. When Asia starts. And then London, I think pre-market London is 2 a.m. And then London officially starts at 3 a.m. Eastern time. Yeah, or maybe it's 2 a.m. I always forget. It might be 2 a.m. based on the indicator that I'm using. I got to double check, but I remember it being 3 a.m. when it officially opens. Whoever actually knows, correct me if I'm wrong. I don't trade London. And then New York session is basically just 9:30 to 4 p.m. And there's of course pre-market New York session like 8 p.m. or 7 a.m. rather, depending on the brokers that you use. Did you still need guidance on picking the right contracts? So with contracts, I like to keep it simple. If you don't have it already, you could just get the ATR indicator, right? ATR is just the average true range. So on average, how much a stock moves in the day. So as a general rule of thumb, if the ATR, let's say for SPY is $5 or $5.30, let's just round down to $5. I'm not gonna go any less than 50% of its ATR. So if my entry price, let's say, is 600, I'm not going to choose a strike price that's further than 602.50, right? So no more than $2.50 or half its ATR. If it's a swing trade, then I would probably go its ATR since it's a swing trade, right? It's going to move a lot more than it would day trading, and we're going to be holding it for a lot longer. If I were swing trading SPY, I'll probably do like a $5 out contract maximum. Whereas if I'm day trading it, I'll just use half of its ATR and choose a strike price that's no more than $2.50 away from my entry price, whatever that may be. Does that make sense? Yeah, you can do that. Like, and it depends on what you're trading too, right? So like IWM, I would usually do it at the money or in the money contracts because they're pretty cheap, right? I can get an at the money contract for like $100, maybe like $110 for one DTE. It's pretty cheap for an at the money contract. Sometimes I'll even get like an in the money contract because it'll be like 150, 160 around there. It really depends on, you know, what you prefer. Yeah, IWM, definitely a good one. I definitely love it. Yep. Always practice risk management as well. Can we see the UNH chart on the 15 minute? Yeah, don't be out in the street chasing stocks. Just make a list of what you want to trade and just focus on that. UNH on the 15 minute looks crazy. Yeah, nothing too crazy. At least speaking to me on UNH on the 15 minute anyway. But yeah, that's pretty much the 15-minute chart for UNH.
Are you able to go over so like the broadening formations?
Mhm.
Um are you able to like talk about like um what happens when like a candle goes above it or touches it? Like what are we looking for with the broadening formations in terms of our candlesticks and our place?
So generally, we're just looking for reversals off of them and actionable signals. Let me turn mine on for YM. So right now we're kind of in between broadening formations, this one and this one here. Generally, if we come back down, price should bounce off of this broadening formation. It's not guaranteed to do so, but just like support and resistance, we're looking for price to essentially reverse off of here and then continue heading back up to take out these highs and reach the other broadening formations that we may have. Now, if we get, let's say, I would prefer to get like an actual reversal off of it. Some people, if it's like close but they didn't really touch it, they'll be okay with it. I personally don't really care too much to do that. Let's say, for example, uh, So we have this hammer set up right here, bouncing off this BF, which is an actionable signal. You could take the next candle two up. That'll be a setup that we can look for. Granted, that would have been a loser because the very next day it just gapped down. Now, this one over here, we have a 2-1 setup on the 4-hour time frame. Granted, same thing here. It gapped down, so there wouldn't have been any setup that you would have taken there. You do have this doji. You can take the continuation to the upside. I don't really take reversals off of dojis, off BFs. I usually just look for like 2-1 setups, 3-1 setups, or like hammer or shooter setups. Like this one over here, even though that would have been a valid one, right? Because we get a bounce and close above the broadening formation. Then you could just take the next trade to the upside, aim for the previous highs, and then your broadening formation and whatever other previous highs you have as targets. But again, these aren't really ones that I would personally take. Maybe I would use it for additional confluence, but generally what we want to look for is just the three universal truths of the strat, right? Actionable signals, broadening formations, time continuity. Time continuity to an extent, because usually when I'm taking reversals off of them, I'm going against the trend, but price should reverse off specific levels and then, continue heading to the other BFs or what have you. But we're just using them as support and resistance to keep it super simply. And we're looking for price to reverse off of them.
Are you gonna have because I'm not entirely finished. Because I'm mapping out my broadening formations for IWM.
Mhm.
And I'm at the weekly right now, and I'm only going back, I think you told me up until 2 years for the weekly.
Yeah.
So when I have all of my broadening formations on, because right now I have some of them hidden,
Mhm.
when I look at it, there's just lines everywhere and I get very overwhelmed. So when we are looking for these signals, especially if we're having any of the actionable signals are bouncing off of the broadening formations, do we have to have all of the time frames on, like the yearly, the quarterly, the monthly, the weekly, or can we have just like the daily or the weekly or the monthly on?
Well, you
Do
generally want to have all of them on so you can see the levels. Because
Oh,
let's
okay.
say if I, which one is this? So this line right up here, this is a yearly broadening formation.
Hmm.
If I turn that off, I don't know that it's there. And we
Okay,
never
gotcha.
want to go long at broadening formations, right? It's like support and resistance. You don't want to go long at resistance and you don't want to sell at support. So if I were to see this BF right here, I would never take this two up candle because this one's getting rejected and it's closing below it. If this closed above it, sure, I would be more inclined to take it. Like this example here, we get a nice strong candle closing above that broadening formation. I would be more inclined to take the next candle to the upside because there's no resistance here for me where there would
Oh,
have been some there. So, and zoom in as well, right? Like if I zoom in here, I only see two lines.
okay, gotcha.
But if I zoom out, there's like a billion everywhere.
Yeah, okay.
So if it's not near you, just zoom in because these don't even matter that all the way up here, all the way down there. Only
Okay.
people that are near me really matter.
Okay.
Sometimes you'll get where there might be like five of them like right on top of each other, and there's like a trigger. Usually, I'll just wait until it does what it wants to do and to clear those levels. Because to me, it's too much uncertainty for me personally. Because sure, it could break through one, but it can reject immediately, add another one and stuff like that. So, of
Okay. Thank you.
course. Cool. Cool. What else you guys got? We got about 5, 10 more minutes. We had some really good questions from other people as well. I wish they showed up. For those watching the recording, and for those who are here who don't know, remember, if you want me to answer your question that you type out, definitely got to be present. There were definitely some good ones here that I would have loved to answer.
Hey, I posted in the chat about all the gems that you were dropping and how grateful I was, and there are people like, how did we get access to that? Where was the notification type deal? So perhaps, however you did the alerts to tell us, like maybe put twice on and then drop it in the main chat, because I know that there's so many people just like you were saying who really, really needed to be here.
What group are you in?
Um, 100K.
Case? Nice. Yeah, I can probably post it in the main chat for next time. I usually post it in the members chat because it's like static there because people talk way too much in uh options chat. It'll just get lost in like 2 minutes. But yeah, for next time, I'll probably post it a few times there just so people can, you know, participate in these. Because I'm
So
always
what?
go ahead.
Yes, I was going to say thank you very much for taking the time to answer these questions as well. Everyone had great questions that helped, and I was able to take some notes as well. I wanted to ask one clarifying question: is YMIWM in options?
Sorry, say it again about IWM options.
Is YM like the equivalent to IWM in options, kind of like SPY and
Got
ES?
So it goes ES, which is futures. Whoops. Then it's SPX, which is the index. And then there's SPY, which is the ETF. For IWM, it's RTY. That's the futures. I think it's like, I always forget. I think it's like RUS is the index. I got to double check. I always forget for that one. And then, of course, IWM is the ETF. And then we have YM, which is futures. I think it's like DJX. I think it's the index. And then there's DIA, which is the ETF. And then there's NQ for NASDAQ. Then there's, I think, NDX for index. And then, of course, QQQ for the ETF. Those are the four main ones that people usually go for. I'm biased against trading well, I'm not really against it. But for me, if you're going to trade the index like SPX, might as well just trade the futures version, at least MES, which is like the micro contract, because there's no theta. It's the exact same setups with no theta. So if you ever trade like the in like SPX and you get burned or it just moves too fast for you with the craziness, because you could be up 50% in 1 second, you could be down 50% in another. But for futures, it's pretty straightforward. Let's say let's just buy market real quick. Can I just buy market? I gotta bring up the order panel. Yeah, so let's just say I'm in this trade. Let's say for the sake of the conversation, it's a 2-1-2 up or whatever it may be. If my stop loss is under this two candle, and then my target, let's say, is at this high over here, this thing can chop for like 5 hours and do nothing. As long as it doesn't hit my stop loss or my take profit, there's nothing for me to care about, right? I'm not going to lose value just because time is passing by. That's why I love futures,
I like that. Thank you.
of course. Definitely paper trade it, if you're new to futures and use the micro versions, usually it's just like an M in the beginning of the ticker. So in this case, I'm trading ES, which is like the parent, or they call it the mini. So this will be like ES mini. And then you could trade like micro ES, which would be the micro contract of the S&P 500 futures. It's 1/10 the value of ES. If you go to the future section and you check the pinned section, I made like an entire thing about futures to help you guys out and get you started on it. Cool. Before we wrap up, what was everybody's biggest takeaway from today? What was the biggest thing that you learned or that stood out to you?
Don't sell support and don't buy resistance.
Oh yeah, 100%.
And then about choosing the ATR levels and just getting that on a trading view. And then identifying like the trend with using like the quarter, monthly, weekly, daily, 4 hour. So yeah, a lot of different things just help to kind of bring other stuff I've been researching together. And then it helps just to reinforce kind of what some of the videos are in our Discord too. So thank you very much.
Of course. Another thing to note is if I'm day trading, I don't really care what anything above the weekly is doing. Sure, if it's in my favor, that's great, but I'm going to be in and out the same day, so I don't really care too much about that, what the higher time frame's doing. I usually pay attention more to it if I'm like swing trading. But yeah, you got it. And as I tell everybody that comes to these things, you guys are welcome to message me with like progress that you guys made or anything that's working out for you after we spoke today. I always enjoy hearing from you guys. Some people think I won't respond. I will definitely respond if you message me.
I
Sam,
just want to I just want to say to I don't know how many people are on here, but I did do a mentorship with Desi on Sunday. And I just want to let everybody know in the group, but it is worth the money to take his mentorship because I was in 100K's group for about a year and I did do the courses and everything, and I've been in the group for the longest time, but I was still very confused. Desi put things together for me perfectly on Sunday. Like it was a huge eye opener, and I just can't even thank him enough. I'm still paper trading, but just doing my paper trading a few days. I think I did it 2 or 3 times last week. I saw a difference right away. So anybody that's on the group, I would recommend booking a mentorship call with him.
sweet. Thank you for
Yes, please drop the link. Thank you very much.
if you if you go to my username on Discord, my link tree is there. There's like a free booking call that you guys can set up. Well, actually, let me just do it now since we're all together. But for whoever's watching the recording, it'll be in my Discord username or pretty much every YouTube video that I have. It'll be like book a free call. And then also the links to like the other stuff if you want to take a look at it now. Where is this link?
Yeah, I'm definitely gonna go watch a YouTube video. I was looking at gold and IWM and then learning about like different type of earnings reactions, like not necessarily taking it on the day of, but just more so understanding where it's going. Like, so yeah, I'm definitely learning discipline.
100%. That's one of the biggest things. I'll leave you guys with this. I did post a link in the chat for those watching the recording, or if you guys watch this recording, I'll release it tomorrow, like at noonish, um, like around noon Eastern time. Um, but as always, it's always good to learn I would even say not always good. It's mandatory to learn technicals. But I'll say like don't leave the psychological portion out of it because to me that's the most important part. Because once you know how to trade, it's pretty straightforward, right? Cool. There's a 2-1 on the 4 hour. I'm going long if it breaks the upside or the downside. That's basically it. Choosing the right contracts, etc. But how you manage that trade yourself is gonna determine if it's gonna work out or not for you. Because some people can get in trade, they get immediately get anxious, start messing with the trade, get out too early, or put too much money on the trade, get overconfident. All these things you guys will experience as you progress as traders. So don't take it for granted. And I rather you guys learn about it now than when it gets real bad. Because when it gets real bad, it's a little more, well, it's still doable. It's more challenging to get out of those like fear mind states and things like that. Like for me, my first few mentors before like I met 100K and the other ones, my first mentors never taught me anything about like trading psychology. Or I didn't even know that was even a thing really, until I started messing up bad. And like it will get to a point where I would get into a trade and I'll like immediately panic as soon as I get into the trade until I dived super deep into it. There's a playlist on my YouTube channel which I pretty much go over like a lot of different concepts for it, a lot of videos. Check out Randy Howell. I'll put his name in the chat so you can know how to spell it. He has a YouTube channel as well. I mentored under him, I think like 3 years ago. He's like a trading psychologist, great guy. Like I learned a lot from him. But yeah, definitely make sure to incorporate that into your learning. It'll definitely show up sooner or later in your trading, and I'd rather you guys get ahead.
Yeah, I totally agree with that. I'm definitely one of those people where I'm like, oh, it's just going to keep going further. So I'll have like 90% profit and then let it draw back all the way to negative 40%. And then end up closing maybe only plus 20% because I got anxious and then it did the full 500% move or something, So it definitely teaches you about patience and understanding if your analysis is what you've charted and the levels are to be met, then you just need to make sure you buy the contract that meets your discretion. So it's just like knowing you can make better money with the zero TEs and etc. But compounding is really really so much better.
100%, yeah. You'll get those days where you have like really strong, you get easy to make like 300, 400%. And then sometimes the market might just give you 100 or it might just give you 50, right? You just got to be okay with that because not every single day, depending what you trade, is going to give you what you want. Always, just take whatever the market gives you because there's always going to be more days. Cool. All right. I can go on for hours about this stuff. I freaking love talking about this. I will see you guys for the next one. Um, the recording will be posted tomorrow about noonish time. And I will see you guys throughout the week. Enjoy your week. Sam, Britt, Tosh, thanks for coming out. I will see you guys. Enjoy your night.